All right. Good afternoon, Trade Devils, friends of the devil, anyone who's visited our YouTube channel. Thank you very much for coming along and welcome. As we announced last week, we're going to be doing a slightly different video schedule going forward for the foreseeable future. We're going to be doing a lot more Bitcoin, primarily because we're in pretty volatile times right now in crypto land, and BTC is clearly the Uber index that determines the path for practically everything else. So it behooves us to pay attention to the big daddy of them all. So on Mondays, we'll be doing zooming into the micro, usually intraday charts, 1 hour time frame or below sometimes, 2 hours, sometimes 30 minutes, 15 minutes, whatever suits the need. On Fridays, we'll be taking a step back and talking about the macro, seeing if the week's price action has changed our view on where we stand at the cyclical level. To kick things off, last week I gave you a case, what I call the bear case. Remember that we're flipping a coin, and bulls is heads and bear is tails, and I got bear last week. So I presented a case where the entire first cycle for VTC's entire price record had been put in, and that we were correcting 1 through 5 at the cycle level. So this week I actually flipped the opposite, and I got bull. And had I not flipped bull, I would have given you the same update anyway. I think that there's a equally compelling argument that we're not, in fact, correcting the entire cycle, but rather that we're on the 4, at the cycle level 4. So today I won't be doing the same macro level measurements and deep dive that I did last week, because quite frankly, a lot of that analysis is directly applicable to the bull case as well. As you'll see, the bull case is simply moving a few primary degree waves to the right, one pivot, and that puts us in the 4. So what I will do today, though, that I didn't do last Friday, didn't have time to, is I will be covering what happens from 20K onward and give you my view of the highest probability counts associated with this bull scenario, which quite honestly I'm starting to lean towards myself. So why don't we start with a review of where we were last week. Give me 1 second here. Okay. So this is the count we had last week. It had us putting in the 2, the cycle level 2, after an extended 5, which again you should expect out of a cycle, a macro cycle. And we did a very detailed count of the entire wave structure of this extended 5. So one of the dangers of trying to predict where you are in a cycle as it's progressing is that cycles, again, are fairly idiosyncratic patterns. They don't move as predictably as the lower time frames. So I pulled up a chart on Amazon. Actually, one of the members on our private Discord requested this, and as I was putting it together, I thought it would be a good example of an asset that has risen many times its original price over the years, sometimes parabolically, but also because of that trajectory has been very difficult to chart. So I put together a piece of chart here from the completion of the first major 5-wave sequence from inception to IPO and then through the dot-com crash. This is the low right here, and this is the next major 5-wave sequence. And when you look at this, and as an Elliottician, it almost counts itself, right? It's very clear here that there's a 5-wave structure, and this is probably the 1. It's probably the 2 being sharp and deep. Looks like maybe it's a double zigzag or similar pattern. Then this is likely looking like a 3, a 4, and then again, this is Amazon during some of its heydays, so an extended 5. That looks like might be putting in an ending diagonal here. Okay, so let's measure that to see whether that hypothesis actually flies. So you got the 1. Let's see, project out from the 2. And you're expecting the 3 to be about 1618, so let's put that on there. And almost to the tick. almost to the tick 1618. It's a very credible 3 here. And then, since we have an extended 3, let's see whether or not the measurement for this proposed 5 makes sense. So we'll go from 0, the origin of 1, to, whoops, wrong tool here. This is the fib tool. Let me get the APP tool out and go from here to here, off the 4, and we're expecting about 618 to 100%, and we get pretty close. We're a little over 100%, but again, it's an extended 5. It's during Amazon's heyday, so not at all surprising that this could be the 1, 2, 3, 4, and 5, and now we're correcting all of this, right? If you were to give me this chart without any more price record beyond that, this is probably the way I would count it, just like I counted BTC last Friday. Now, with some context in terms of time, we'll see that, and let's put it on log too, that it likely wasn't a 5-wave sequence completed. It was probably part of a broader 5-wave sequence here. Okay. Now remember, this is in log, so it's a little distorted, but let's take it out of log, and you'll see this is probably the end of what I was pretty confident was looking like a completed 5-wave sequence, right? So this was probably a 3. It's probably a 5. This is looking like a 4. It's a zigzag with an X and a triangle Y, it looks like. So that's the way I'm seeing it. So the moral of the story here is you can never tell while a cycle is in progress. You can get clues with measurements and such, but at the end of the day, the count I presented last Friday was certainly credible, but so is this one. So is this one. This one's a little bit different. We're putting in the 3. We've already put in the 3. Same exact count. The extension, that funny 16.18 times, so 1618, but with a couple zeros added, it actually plays as a measurement from 0 to 3 for an extended 5. It's a very high probability count for that, but it's also a high probability count for a 3 from 0 to the top of the 1 measured off the 2, right? So another interesting point here earlier in the chart is that if we move everything to the right 1 pivot, then this becomes this triangle that I proposed as the 4 of the 3 becomes the 4 of the 3 of the 1. Sorry, this triangle, the 4 of the 1, and this little one becomes the 4 of the 3 of the 3. So it actually makes sense that this this chart also makes sense. The 3 measures well between 1618 and 2618. The 4 is a triangle, as we'd expect the 4 to be, or a flat pattern. You put in a very extended 5, but again, it's for the 3 at the cycle level, so not a surprise. A very cleanly measured triangle at the 4 completes the 5, and this whole thing is the 1. Okay. Now, there are some issues with this count that I don't like. I don't like that the 1 and the 2 have taken so long for such a young asset. In my experience, having been in the markets for 20 some odd years, young assets tend to put in cycles faster, especially the earlier ones, than other longer dated assets, because they're more volatile, their price action is more extreme. The early adoption phase ends faster, and the FOMO phases are pretty extreme. So what we have here is we have a 1 and 2 that's substantially longer than the 3 and the 4 in progress, which I don't love that. But aside from that, it's a very credible case, and when you take it out of log and look at it in arithmetic, potentially more credible. This is a 1 and 2, and this is a 3, 4. Visually makes a ton of sense to me as well. So today we're going to talk about this possibility and what that tells us about 20K on downward. The good news with all of this is that there is a bull case, and it's a very credible one. The bad news is I see more pain, more down, even in the bull case. Of course, it'll end faster, but really, for me, it's a case of choosing between pain and double pain. So let's talk about 20K on downward. Here we have what was last week the proposed 5 and is now the proposed 3 channeled. Remember, I had this as a leading diag. Remember, this is in log, so it looks a little off, but this is more how it looks like without the channels, of course, in arithmetic. And I had this as a very clean, almost perfect 3, and then a highly extended 5 that ended in a ending diagonal. So one of the things that we can deduce from Elliott wave theory is that after extended waves, typically, if you're after a 3, the 4 will enter the territory of the 4 of the lower degree on the 3. So the 4 of this entire cycle, if this guideline is correct, should encroach the territory of the 4 of the 3. Now the 4 of the 3 I've drawn here with this yellow box. Obviously that has us going down a bunch more from where we are today, right? Again, this is not a rule, it's a guideline, but it's something that over the years, and frankly with my observations in crypto, has been a very good guideline for where price might go. So obviously the 4 covers a lot of span, or a lot of price span here, but it's something to think about. Are we done correcting this thing? Remember that the proposed 2 took substantially longer, more than twice as long as we have been in the 4 already. And the 4 tends to be a longer correction, a sideways shape, alternating against the sharper 2. Remember, I had the 2 as a double zigzag, and that lasted a good year and a half or so, I believe. So I don't think we're out of the woods yet. So doing analysis now at the more micro level, looking at things from 20K on downward. Let me just take out the Vegas wave so you can see a clean piece of chart. We will be doing an Elliott wave discussion in a little bit, but I wanted to go back and look at some of the other fundamental tools that we use at Trade Devils to kind of find our place on this chart. There's lots of ways to look at it from an Elliott perspective, but before we do that, let's figure out, let's orient ourselves with some more traditional TA. So one of the things that we do is look at median line analysis very closely. It doesn't always work at the cycle level, but at this level, zoomed in at a 2-hour or 1-hour time frame, it's been a great tool to figure out not only where price might go, but also where price has been. What does the pitchfork tell us about the recent moves? So here I have drawn, let me put the Vegas waves back on. I've drawn a pitchfork from 20K, whoops, yeah, there we go, from 20K downward, assuming that this is the only piece of chart we have right now. If this was the price pattern that we're analyzing, we would draw this pitchfork. Obviously, these are the key pivots. Visually, you can tell. And we don't always do this, but I do it just out of habit from technical analysis I've been doing before I met Sam. I draw what's called a Hagopian line. And the little mnemonic device is, if you're trading the trend on a pitchfork, you better hope you don't cross the Hagopian line. It's basically a support level, or sorry, a resistance level if you're trading the trend. So meaning if you're short, that once price reaches out of this thing, it's probably a change in trend, at least in the medium term. So obviously, given the way prices has moved from that initial drawing of the pitchfork, we can't really credibly use this pitchfork. It's just too sharp down. So if we make it a modified, a shift pitchfork, you can see how well it's contained the wave from 20K all the way down to 5.9K, and then beyond that. Now, one thing I'll note is I'll do this for different pivots as well, off of the same key 20K axis. But on this first pitchfork that I drew, and then I modified the shift, the Hagopian line does play a role, right? You can see the Vegas waves containing the move, and then on the sharpest moves down, acting as major resistance. There's a big rebound off of 5.9K, off of a major trend line. This trend line drawn in red. This trend line goes back a couple of pivots all the way to, I think even the 1, or maybe the beginning of the 3, of the proposed 3 of this bull case. And so it acted as support here, slight breach, but strong bounce leading to a rip. And then the 5.9K rebound landed on the dot on this trend line. So I remember when price was looking like this, and we thought this was the unbreachable line, right? But right after the Hagopian line got crossed, the Vegas waves got crossed, and boom, we broke through this trend line. Okay, and so we created a new trend line, which I've drawn up here. Or is this thing? Yeah, so the new trend line basically moved everything down 1 pivot. Okay, so anchored it off of this. Skipped this one, obviously, because and then this one was the other connecting low point for this trend line. And of course, you have to can this pitchfork and this Hagopian line, so let's hide those. Let's see. Got so many trend lines here, not sure which one is which. Here we go. Yeah. And a new pitchfork. Got it. Okay. So that one's the last one. So this one. Okay. So whenever a Hagopian line gets breached, I redraw the pitchfork. It's a signal to me that there's new price pattern, and the old pivots are no longer predicting price accurately, and so I draw it off of the new pivots, right? So instead of from here to here, same apex, but I anchored it from here to here, which are the obvious pivots to use, and the Hagopian line goes from the apex down to the upper boundary pivot. So obviously, in retrospect, that pitchfork didn't contain price, but shortly after it breached the Hagopian line, it did look like it was going to contain price, and then it got out of the primary pitchfork area, and so I would switch it to Schiff. And now you've got, very nice pitchfork that the median line is playing obviously a very big role here. Okay, bounces off this support line that we drew, crosses the Vegas waves, and then crosses the Hagopian line. Now, typically the Hagopian line is not used with Schiff. I personally have found it to be very useful even with Schiff. But once it breaches this and breaks out of here, now it's looking very bullish from a pitchfork median line perspective. It didn't quite touch the median line here. And as we know, if that doesn't happen, then usually the price reverses at least the length of the pivot that tried to attempt the median line cross. So it almost does that. It goes through here. So now it's time to draw another pitchfork. So let me just pull that up. And let's see, where is this? Yeah, there we go. And quite honestly, this is probably the last pitchfork that makes sense on using the apex as a pivot, because after too much more sideways, this is going to lose its power as kind of the main anchoring pivot, the apex here. So, but nevertheless, it worked one last time, and it gives us some clues as to where price might be headed. So, again, up until about a month ago or so, this pitchfork seemed to be containing price action quite well. New Hagopian line. But then the Vegas waves kick in, act as resistance, and this time, once it crosses the main pitchfork boundary into the mini pitchfork boundaries over here, I will change this to Schiff, and again, very nice pitchfork with a median line that has a huge roll and boundaries that make more sense, right? But this time, though, we've broken this support zone, the one that we redrew. Okay, we've broken it very very cleanly on a good amount of volume, but the Hagopian line is now containing the move. Pretty bearish. Moreover, not only is the upper bound, it's getting farther away from the upper boundary of this shift pitchfork, but now it's looking like it's on a beeline to hit the median line. So that might give us some clues as to what might be going on. So what is the next support level? Well, the next support level structurally is this red line. Let me, it's this one, right? And this one is created by connecting the last two major pivots that price didn't breach, which is this one and this one. And it broke through that one too the past couple of days. So we're now at a point where the only support level that makes sense is a parallel line between the 5.9K low, this one, and here, which, I mean, you don't have to be a rocket scientist to figure this one out. It's looking like it's going to get there. You know, the median line crosses it right around the time frame where it's most likely to hit. The Vegas waves are acting as major resistance. The Hagopian line is acting as major resistance. Guys, I just don't see how it doesn't get there, right? I know this is supposed to be a bull scenario, but looking at things objectively, this is looking pretty tough for BTC. You know, we pull up some oscillators. You can see there's just not a lot of support. The breadth. We use an oscillator called CCI-OBV, made by a guy named Lazy Bear, who's got some phenomenal scripts for TradingView. But this, to me, is basically an indicator of market breadth, and how much volume, how much participation there is in the market. And you know, it's pretty low. It's pretty low compared to here and even here and here and even here. It's nosediving as price nosedives, not a surprise. And yeah, RSI is pretty low, but it's not like it hasn't been lower before, right? Last time it was this low was around, looks like around April or so. And there was a sharp move downward before the rebound. So I'm expecting something like that might happen. Now, median line analysis does tell us that once it hits this point for a double bottom off of this, it's very likely to reverse direction. So that could be a good trade setup for on the long side. But for now, I think you got to be cautious. Okay. So let's go back to Elliott wave analysis for a second here. Get with this as context to figure out what the move from 20K downward might mean in the context of putting in a cycle level 4. So back to Elliott wave theory. Here's the same piece of chart unmarked. And if we're assuming that we're in a cycle level 4 right now, a macro cycle, obviously everything's a cycle. So when I say cycle, I'm talking about, you know, from inception onward. This looks to me not that sideways. You know, we should be expecting a sideways correction most of the time as a 4, especially if the 2 was sharp, which it was. So, but again, this is something that's in progress. So what can we deduce from this chart? Well, the way I approach this kind of analysis that's in progress is I look at the wave patterns that provide geometrical clues. And obviously this is a very sharp move. You could call it an impulse, a zigzag, you know, I guess maybe not an impulse, but a diagonal of some sort, or a sharp zigzag. And this is looking quite triangular, right? So that's just something to tuck in away at your brain as you analyze the wave. And then you look for patterns that are irrefutably something. And in this chart, because of some of the ugly moves, there are not that many spots that are like that. But this one right here, to me, is one such spot. So let's go a little wider. It's going to be very difficult to make a case for this as anything but a 3, an ABC up, a 3 down, an ABC down, and then 5 ways up. I mean, multiple ways to count it, but the way I would count this is as some kind of diagonal pattern, you know, with the 4 here encroaching on the territory of the 1. So something like a 1, 2, 3, 4, 5. Okay, like an expanding diag maybe, right? It's hard to count this any other way, right? I think you guys would agree with me. And so this is a flat correction pattern. And that's important because that gives us a clue as to where we are in this other piece of chart where, is it 5? Is it 3? It's hard to tell sometimes. The other piece of a chart that to me is quite irrefutably something is this one. I think it's very hard to make a case that this is not an impulse or some kind of motive wave. It's extremely sharp. It's responsible for a very large drop in a very quick amount of time with very light retraces. You know, 1, 2, 3, 4, 5, something like that. Okay. So if this is a 5-wave move and this is a flat correction, what does it tell us about what the rest of the chart? Well, obviously, this can be counted as a 5-wave move too, which would make this a zigzag. Okay. Obviously, this could be counted as all of it, some kind of impulsive or motive move down. Something like a, 1, 2, 3, oh, sorry, 1, 2, 3, 4, 5, or something like that, or even like a 1, 2, 3, 4, 5. But, those particulars don't matter that much. We're looking at clues as to where we might be. So, yeah, so this could be 5 waves. It could be 3 waves, depending on how you count it. This is a critical piece of chart right here. Okay, and I think this is where you need to place a lot of emphasis if you're trying to analyze where we are in the cycle. Sorry, in the 4 of the cycle. So let's actually zoom in here because it can be 2 things. It can be, well, I guess it could be 3 things. It could be ABC very credibly, and I'll show you why. It can be 1, 2, 3, 4, and then a truncated 5, a failed 5. Which I've gotten a little bit more comfortable with that, given that I have this as an ending diagonal pattern, a contracting ending diag, which leads to a massive move down that retraces almost the entire potential proposed 5 here, right? So you would expect that out of a truncation and an ending diag combined. So it's possible that this is a 5-wave sequence. It's also possible that it's not just ABC here, but this is 5, 3, and then 5 with a failed or truncated C. All 3 are possibilities, and we'll talk about why that matters in a second. Okay, but zooming in here at let's change it back to 1 hour. Might have to go even lower than that to see the detail, but I actually made some measurements here that I've not shown yet, because I wanted to walk through it with you guys, because this is a very important part of the correction. It might be the most important as to figuring out where we are. So this sequence here gave us a lot of trouble. I remember back when I first joined Trade Devils and we were trying to figure out what the hell this was. It's very irregular. It's sharp and then sideways, and very difficult to count, right? Clearly it's not an impulse, because there's no 5 waves that you can count without the 3 being the shortest that don't have the 4 overlap in the 1. It's very, very hard to do that unless you've got a tiny little one here that you can't even see in the 1 hour, which not credible to me, right? So if this is a 1, 2, and then this is a 3, 4, then you've got some kind of diagonal 5, 1, 2, 3, 4, 5, but then the 3 is the shortest, right? Look at how sharp and long this wick was, right? So that can't be it. So if you move this up more, and this is the 1 and the 2, okay, then the 3 becomes a diagonal structure, 1, 2, 3, 4, 5, and 3's can't be diags, so you can't really count it that way. So the only way to count this is as a leading diagonal, in my opinion, is this is the leading diagonal, where this is the 1, this is the 2, okay, this is the 3, this is the 4, and then this is the 5. And that avoids any rule violation, and quite frankly makes a lot of sense to me. After a massive move from 20K to 5.9K, I mean, the bulls aren't going to be impulsing straight up into the moon. It's going to be a cautious, sometimes sideways move forward. So let's check out the measurements. So yeah, if this is the 1 and the 2, and this is the 3 and the 4, look at how well it measures. This is 618 of the 1, the proposed 3. And then the 5 is not 618. There's a little bit of an overthrow here, but it's well shy of 100% of the 3, which makes 3 not the longest. So 1's greater than 3, 3's greater than 5. Very standard diagonal measurements, right? The reason why I'm going through this detail is it's important to establish this as a 5-wave sequence. Okay, if you're going to analyze that important 5.9K to 12K move, okay, which I posit to you that that's the most important move of the correction. Okay, so if this is 5 and then this is correcting the 5, then what the hell is this, right? And so this is where, you know, different counts and different approaches might count things differently. But I've got this as a 5-wave move. Very clear to me. This 1, 2, 3. You've got a triangle here, which gives you a lot of confidence. This is a 3, not just because it's the longest and it channels well, but you know the 4 triangle makes this have to be a 3. And then this 5 to end it, right? Makes a lot of sense to me. Now, look at how well the triangle predicts the end of the 5. So you take, let me see, zoom in a little bit. So you take, shorthand is the length of the A, but really by the textbook, you draw trend lines, the upper boundary, lower boundary, and where the A lands, you draw a perpendicular line all the way to meet the channel boundary, and that's the length of the thrust, of the projected thrust that should be projected off of the E. So we've got the A, the B, zigzag C, zigzag D, zigzag E right here, and then you got this big thrust. Now, how far should the thrust go? Well, according to this thrust measurement off of the E, 100% right about here, and that's where this move ends. So to me, we've got on our hands here a very clean 5-wave, 3-wave, 5-wave move. Okay, so A, B, C. It's important to establish that because zoomed out, it's hard to tell whether this thing's a credible 3-wave count, but I've already shown you that it is. Okay, so let me just take this out so we can start charting on top of this. So why is that important? Well, it's important because it establishes the possibility that this is an X. It's a very short X, and we'll talk about the consequences of that in a second. But if this is an X, then that opens up the possibility that 20K to 5.9K was some kind of zigzag or a flat correction if you take this as an expanded flat. Okay, so this would be a W, a zigzag W or a flat W, an X, and then everything that ensues from that becomes something else corrective, right? Now, I see a lot of counts out there that have all types of W, X, Y, X, Z, and you know, I'm not saying those aren't credible counts. They are, but if we're playing probabilities and sticking to the guidelines and the rules, then there's a lot that Elliott wave theory tells us about what's credible and what's not. Okay, if this is an X, there's only so many things that this correction can be, and that's where it gets exciting because it gives us a clue as to where price might go. Okay, but before we get into the possibilities of this being an X, what if it's a 5-wave sequence? You know, 3 here, 5 here. What if this is a failed 5? You know, what if this is an impulse? Well, if it's an impulse, that also narrows down the possibilities for what might happen afterwards, right? So why don't we start with Sam's count, because I did get bull today. So Sam's count, he mentioned, I think he did a chart when price was around here, or maybe it was here. I forget exactly where it was, but he was saying very rightfully that the bear case was hanging by a hair. I mean, it was about to be breached. And he had it as some kind of 1, 2, 1, 2, right? Well, that possibility's gone because look, you know, price has gone below the bottom of the proposed 2, If this is a 1, 2, 1, 2, well, it can't be anymore. So it can still be a 1, 2, meaning this is the failed 1, A, B, C. That's still possible, but man, I mean, if it was hanging by a hair last week, it's hanging by an ass hair this week because it's got a few bucks to go before it's below this line, right? So that's still a credible count, and it's possible. It's also, the reason why I like that count as a bull case is it doesn't stretch the guidelines of Elliott wave theory like some of these more bullish counts do, okay? Yeah, you're in like single digit probability zone, but it's, you know, it's credible and it doesn't violate any rules and it's a clean count. So discounting that because it's quite improbable and Sam's already talked about it, what else can this be if this is a 5-wave sequence? Well, similarly, it could be a 5-wave sequence, so an A, an impulse A, zigzag B, and then an impulse C, which would take us, let me get this back on 2-hour time frame. So that, you know, if this is a 5-wave A, this is a long, admittedly, but, you know, still credible zigzag B. It can't go below here, but it can literally touch it and be okay. Then you could have a zigzag that looks like this. So I measure the length of the A on the orthodox, not here, but here. Remember, it's failed, so you take it off the orthodox top where it failed. Let's say it ends here. Well, the zigzag would probably go, for it not to be too much of a flat structure, it would probably go to 1618, something like this. Somewhere between, call it here and here, but more likely here, I would say, right? So that's a possibility, that this is either an impulse down with a zigzag B and an impulse down for it to be a sharp, not flat, but sharp, but kind of flat looking correction with a sharp C leg down to complete it. The good news there is we've got, you know, the C left to put in, and then, you know, obviously a brutal 5-wave sequence down. But if that's where it goes and this becomes a probable count, you're going to know roughly where to take profit, you know, and kind of how to trade that pattern. One of the guidelines that Elliott wave theory enforces as a very strong guideline is that the X of a sideways corrective pattern, a sideways corrective combination, not pattern, that the X of a sideways combination should retrace the preceding structure, whether it's a W or the Y, if it's a double 3 or a triple 3, but the X should retrace either the W or the corresponding Y by approximately 90%. Okay, I feel people use combination labeling way too loosely, given that guideline, and I don't like doing that because it's a little bit like a cop-out where if you can't figure out what the correction is, well, throw a bunch of X's in there and make it work, right? And that's not the point of Elliott wave theory. The point of Elliott wave theory is to eliminate possibilities and narrow down the probabilities. So if we use that guideline as law, even though it's not, it's a strong guideline, it's not a law, and we're thinking this is a 4 because cycle level 4, and as a result should be sideways, which a very large percentage of the time it should be, then having that guideline as an X eliminates a lot of different possible counts and narrows it down. And this is really what we're after here. The reason why we spend so much time charting all this is we're trying to figure out, okay, what are the most likely 3 or 4 paths for price to move, and what's a great trading strategy, noting all of those, right? We don't cover trading strategy here necessarily. We do that in our private Discord, but just as a way to think about trading strategy, we should cover the most likely counts. And for me, if this is an X from here to here, as we established a few moments ago, the only credible combination pattern that's sideways is that the following sequence from here to the right is a triangle. Because that's the one situation where something like a zigzag or a flat can alternate with triangle here as a Y, or if this was a Y, the triangle as a Z, with the X being so short. I think the X, let's see how much the X retraced. X retraced, I mean, nowhere near the guideline, obviously, but probably like 3.2 maybe. Yeah, around 40%, right? So that's actually a fairly common retracement if the ensuing structure is a triangle. Now, I said last week when I was reviewing the bear case that that would be a very bullish outcome, that this was a WX and then triangle Y. Because of the move since last Friday down here, this would have to be the A in that scenario. But it's still possible. It's very possible. The A could go down below the 5.9K and still be credible as a running triangle where you put it in, the X, and then the A gets put in below the origin of the X, and then B, C, D, E, and then boom. You go to the moon off the thrust, right? So that to me is bullish, not in the sense that the price is going to moon anytime soon, but it gives you some kind of conclusion to this correction. It gives you a pattern that's very, I don't want to say very, but fairly easy to predict and measure. And, you know, it allows you to develop a trading strategy around that pattern, right? But it's still very early because of the move down from here and validating this as an A. So if this is a triangle, this has got to be the A being put in. Now, given the ugliness of these moves, oh man, I mean, brutal waves. And the triangle needing to have either a zigzag or zigzag family corrective pattern or a triangle in rare cases as the A, then we know that this is likely the complex A because it took so long, not necessarily the shape, but the length of time. And so the B, C, D, E should be shorter and faster and have to be zigzags, right? So that's interesting to note as a possibility that this is a W of some sort, whether you call that a, you know, a flat correction W or a zigzag W, up to you. But same consequence. This is the X and A, B, C, D, E. That to me is a very credible bull case scenario where we don't have that much more down to go. And then we're, you know, probably a few months away from all of this being over. And then we can look forward to the cycle level 5, which should be a monster wave. I mean, you got to go along that and hold if you get in early. Okay, so that's one scenario if this is an X. The other possibility is that this is the start of an X, right? If the X per the guideline needs to retrace somewhere in the vicinity of 90%, you know, allowing for up to 786 or so, give or take, then if this is A, okay, A, B, C, A, and this is a zigzag down, A, B, C, B, as long as it doesn't breach this level, this low of 5.9K, which it looks like it might stop shy of that, given the count that Sam did last week of this being an impulse, then it's very possible that we have a flat correction as a B. So this is a zigzag. The X gets put in. You've got a monster C wave, as many flats do, because if it's not 100% of the A, then it's often 1618. So if it's 1618, let's see. Let's say it ends, let's say it double bottoms, like in a classic flat formation. You go A, B, and C. The 1618, well, it's a little shy of 786, but now, if this were the X, it would be much more credible to me as an X than something this small. Okay, so it's very possible that this could be the X being put in, and if this is a sharp pattern, meaning a zigzag, and it's a sideways combination, which, you know, then it can't be a zigzag again. Then it's probably a flat or a triangle. And the beauty of a triangle is it doesn't have to reach a price extreme. So you could have a triangle that goes A, B, C, D, E all the way up here, and it's totally credible. So again, these are bullish options we're covering, but that's a very credible bullish option to me. In fact, it may be more credible than this being the long-ass A of a triangle, which is, it's possible, but It makes more sense to me that this is the X being put in, and then we have a few more months to waste on a subsequent Y that would make this 4 last at least as long as the 2 that we showed last week, which was a year and a half or so, I think, right? I mean, you guys are like, man, that's the bullish option. Well, wait till you hear about the bearish options this Friday. I mean, that is a bullish option. It's a bullish option for 2 reasons. Number one, the price isn't going that much lower than the 5.9K that it put in at the bottom of this proposed W. And number two, if this makes a move like that, then it really narrows down the likely structures that are going to follow it, if you follow the guidelines closely. And then you can trade it. That's the whole point of doing this analysis, right? So we covered 2 possibilities that this is an X. One is that this is a triangle in formation with the complex A. The second one is that this could be still part of the X being put in. Now, what if this is not a sideways correction? And that's kind of scary, right? That's where you know, people talk of like 3K, 4K. That's where that comes from. Is what if this is an X, but it's a very credible X of a zigzag combination, like a double zigzag? What if this is ABC zigzag and this is the X, which retraces well within the norm for a zigzag combo? A zigzag combo, you would expect the X to be, you know, between 38% to 50%, give or take, you know, even as much as 618. Be totally credible. It wouldn't be that credible if it started retracing 80, 90% of the zigzag, right? Which is why if this is a flat that goes A, B, C all the way up here, now I'm getting a lot of confidence that the next leg of the correction will be either a flat or a triangle. You know, I'd be trading that very actively, although I'm kind of not that active right now, waiting to see what happens here, okay? But if this is a double zigzag, then we've got, the good news is it's going to end sharply pretty soon because this has got to be the A, B, and now the C is about to end. But the bad news is we're going to have a bunch more down, right? I mean, if this is the A of the W and this is the B of the W, 100%, which is the most likely length of the C of a zigzag, would get us to, you know, 4.6K, right? Which would mean this would be something like a 1, 2, 3, 4, and then we're putting in an extended 5. Very credible given the price action and some of the non-Elliott wave TA we just did a few minutes ago, right? But those are the cases that are likely if this is an X. You know, there's other counts like, you know, W, X, Y, X, Z, but yeah. To me, those don't fly so much because they just completely miss and whiff on a major guideline. And the price action doesn't seem to be following that. You know, you expect contraction and consolidation in a triple combo, but this is, I mean, it looks like it's headed south more, right? So, again, just reviewing the options one more time. W, X, triangle Y, W, X being put in. This is the A of the X, B of the X being put in, and C up, and then Y, likely a flatter triangle. Time will tell. Or a very painful but faster option, which is W as an ABC zigzag, X, and then this is another ABC zigzag for a double zigzag combo. Now, the reason why I don't like that, other than price going so low in a bull case, is that not enough time has transpired. Remember, if we're in a cycle level 4, it's very unlikely, in my opinion, that it's sharp and repeats the same exact pattern of the 2, which was a double zigzag itself, in half the time. That doesn't fly with me as a likely scenario. So I don't want to discount it. It's certainly possible, but from an Elliott perspective, probably not the best count. You know, I would favor the other 2 possibilities if this was next. Now, what if this is an impulse? Aside from what Sam's count is, which is the 1, 2 hanging by an ass hair, what would other likely possibilities be? Well, a zigzag can look like a flat. Okay. The guideline is that the B of the zigzag can't literally go beyond the A of the zigzag, but you know, if this is 1, 2, 3, 4, 5, and this is an A, B, C being put in, then this could be a zigzag up, right? And you'd have then the possibility that it's a zigzag combo, but with a higher starting point for this, for the C or the Y leg, right? So maybe you don't go to 4 point whatever K. You go to, go down here, you go up here, and then you end somewhere around here, with a 5 handle. That's possible. So I think that covers all the high probability likely paths if this is a cycle level 4. We will cover the bear case too on Friday, and probably beyond that, since there are a lot more possibilities in the bear case. But assuming that this is a 4 for the time being, it's getting interesting. It's getting really interesting because price is getting to the point where, if it gets pretty close to 5.9K around there, or breaches it, then we're going to get some answers here as to which of the counts that we discussed today is still in play. But just again in review, I've got this as a possibility, the W, X, and then a very long Y where this is a triangle being put in. This would be the A. And it would have some kind of shape like this. This is a very exciting possibility, guys, because once we're in this region, again, this has to be the complex wave. Look at how long it took, right? So then the B, C, D, E are going to happen a lot faster than this, and they must be zigzag in nature, which gives you, what is it, B, C, D, E, 4 major pivots to trade. And you can measure them and figure out where they land. You can count them with that in mind, that they have to be zigzags. It becomes very exciting. It would be a tremendously profitable few months, especially for our Discord members, where we would map out every pivot and talk about approaches to how to trade them. But that's one possibility. The zigzag interspersed with a zigzag X and a triangle Y is a very common double 3. In fact, one of the most common. So this is definitely on the table. The other possibility, of course, is the possibility that we're doing this. Whoops. That the X is still being put in. This is either a failed A for a zigzag or a ABC flat and then ABC extended B of the flat. But a flat, the B tends to have a lower slope than the sharper slope of the A for a flat. So it makes a lot of sense that the C would go up here to 1618 possibly. And then you'd end up with either a triangle or some kind of flat correction, because if it's a double 3 and this is a zigzag, this can't be a zigzag too. It has to be a flat or a triangle. And interestingly, not to extend this video too much, but if the X, all it does is travel here, then we got the same problem of this X being short relative to this W, right? So what does that tell you? Well, we're about to embark on a triangle here. That's a very likely path. That's what happens. And again, that's awesome, because what we want is clarity. We don't want, as traders, that the market move in any particular direction. A good trader should be able to make money in any market, up, down, sideways, backflips, whatever, right? But where things get really complicated is you can't find your place in a chart. You can't find your place in a cycle. If this X completes as such, well, it removes 80% of the likely scenarios, and it gives us a path to trading the crap out of this move for the next few months. Okay, so I personally am very excited to see what price does over the next couple of days. Those are the scenarios where this is an X. We also talked about a scenario where, this is a zigzag that gets put in here, and it's a double zigzag. W, X, Y, right? And so, again, if that happens and this is a zigzag, then we can trade the Y knowing that it's a zigzag, or a zigzag actually can't even be a zigzag combo. It has to be a zigzag pattern. So it gives you even more clarity if that's what happens, right? We also talked about what I think highly unlikely probability that this is a double zigzag about to end. Something that looks a little like this. But guess what, guys? I mean, it's possible, right? If this goes all the way down to 4 something, or 5, something lower than a 5 handle, and hits 100% of the extension of this move, or something close to it, like 90% or 110% or something around there, you know, back up the truck, guys, because that is a classic double zigzag. And if we've completed a cyclical correction, it's moon time. Okay, but you know, we can't do any of that yet. We got to figure out what price is going to do. And so I look forward to keeping you guys updated, and we'll talk more on Friday about the bear scenarios.